Earnings are accelerating, and we've got volatility increasing. And we're back on Bank Watch as First Republic San Francisco tumbles another 30%. And finally, my good friend Arthur Hill joins the show today. Welcome, everyone. This is The Final Bar. Welcome back, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I am your guest host for today. I've been subbing this week for Dave Keller, who traveled to the East Coast to be part of the CMT Symposium in New York City. He's joining colleagues from around the globe, and we'll talk about it later, but he'll be broadcasting on Friday live from the CMT Symposium with guests like Ralph Acampora. I met Ralph last year, just a wonderful gentleman, literally an encyclopedia of the investing world and technical analysis. So I think you're really going to enjoy that show. But hey, we got a market that we need to get into today. It honestly, not a very good day if you're bullish. Really don't like to see that sell off after some really good news out of a couple companies reporting solid earnings. So let's take a look what happened on Wednesday. All right, going to start off. First of all, the Dow Jones Industrial Average finishing down about 0.2%. S&P 500 down about 0.4%. NASDAQ, we did have a bifurcated market with the NASDAQ actually up today. That was up almost 0.5%. But I want you to notice as I click on these, the Dow Jones, look at this move here early in the session, mostly because of Microsoft. But as I move to the S&P 500, you can see a little bit more pronounced action because of Microsoft. And if I go to the NASDAQ, you can see even more pronounced action. So Microsoft is a weighting in all three, but is much more heavily weighted in the NASDAQ. And you could certainly see that the way the NASDAQ performed today. But we gave back a lot of those gains from the morning. I did not like the afternoon action. We did bounce a little bit into the close, but now we've got Meta platforms on deck to report shortly, and we'll see whether or not Meta can come through, and maybe we get the gap up to follow. I don't know. We'll have to wait and see for that a little bit later in the show. Small caps down almost 1%. Mid caps down nearly 1% as well. The VIX climbing. I think the key level there, at least in the short term, is going to be around 20. We got up close to that level earlier in the session, finished off the highs, but still up again. So volatility has now been on the rise for the last few days. I think that is something we're going to want to continue to watch. Again, looking at my chart list, I can pull this up and give you the latest, but there you can see the NASDAQ 100 and the NASDAQ in the green, everything else losing ground with mid caps and small caps lagging. Moving to the sectors. And again, let's get an update on this. XLK. Leadership, the only sector, only one of 11 sectors up today, and that was technology. The other 10 down, led by utilities, which was a little odd. We had utilities, we had healthcare, two defensive groups that lagged today, which was a little odd when you look at the Dow and the S&P both closing lower. Normally we see the more aggressive areas finishing down. Instead, you see the technology and consumer discretionary areas actually at the top of the leaderboard. So I thought that was a little bit interesting. Of course, earnings had a lot to do with that. I'll show you a couple of charts there in just a couple minutes. The spider, you can see here, pulled back yesterday below that 20-day moving average. That's always a concern for me, especially when we're trending higher. So I think we got to be a little bit careful there. And we did accelerate a little bit with the selling today. So this is something that I would be very careful of. I'd like to see the S&P get back up above that 20-day moving average. That was not the case today. We did not see that recovery. The QQQ came down yesterday, broke below the 20-day moving average as well. One of the things I was telling members at Earnings Beats today, I really want to get back through that 20-day. You can see on an intraday basis, we got almost a 315. We had climbed above that 20-day, and then we gave it all back this afternoon. So not good action there, closing for a second day below the 20-day moving average. Another QQQ chart I wanted to show you. This was a chart that actually I started about a week ago and pointed out that the highs, we were starting to come down. It was option expiration week. We had a big move up. There were a lot of net in the money call premium, not only on the QQQ and the Spider, but many individual stocks. So that always makes me a little nervous going into options expiration. And you can see that is carried over right into this week. And we continue to trend down. So the first thing I want to see is, number one, get back up above that 20-day moving average, which is at 314 and change. Because if we do that and we can confirm it and stay there, we will be breaking this short-term downtrend line. So keep an eye on that. Another thing that I've been showing on the shows this week, and I had a lot of folks asking me, could they get a copy of this chart list? I'm going to try and get that to you, and I'll show you how in just a minute. But here were the top 10 holdings of each of the ETFs. So we can put it in order of the XLK. So the first 10 are all XLK. They're all technology. And within that, I have each individual stock, and you can see down or next to it the percentage ownership there as well. It's not on this chart list, but I did make a change on another computer chart list. And so when you download this chart list, you'll actually get all of these in order. So Apple will be first, Microsoft will be second. I went in and I made a little change and tweaked it. It's just not on this particular account. So the way, if you'd like to get this, because we had some feedback saying that some viewers would like to get this, if you go over to Earnings Beats, and if you are an EB Digest subscriber, this is a free subscription. Name and email address is all it takes, no credit card. But if you are on this, we are going to offer that chart list one time on Friday morning in our EB Digest newsletter. So that would be how you can get your hands on it. I do want to mention you do need to be a you do need to be a StockCharts subscriber in order to download it. You need an account. So you will need to have an account at StockCharts. And I believe you have to have extra or above, because I think your basic will only get you one chart list, which is the default that you're provided when you first sign up. So just make sure that you're at least an extra member. And then if you sign up for our EB Digest Friday morning, there will be a link and a password. You can download it right into your account. Save you a lot of time, I can tell you that. The VIX. So this is what I was pointing out. This 20 area right here, you can see all of the failures to get through 20 on the VIX. Last 2 days, excuse me, we've been right up there. We just haven't been able to get through. So watch that 20 level. And then if we can get through, I think that could lead to some additional selling in the market. If we don't get through and you see this VIX start rolling back over again, that would not be good news for the bears. It'd be much better news for the bulls. Normally when the VIX goes down, markets go up. When the VIX goes up, markets go down. It's always, or almost always, that inverse relationship. Some big earnings out on Wednesday, or actually after the bell on Tuesday. Microsoft, big reaction there, nice breakout. They beat top and bottom line estimates. Alphabet, Google, you can see this was one I wasn't really favoring because its relative strength versus internet was so weak going into its earnings report. I was a little skeptical. We did get a little bit of a gap up with earnings, and then we came right back down again. So I think you've got to be a little bit cautious right here with Google. I've got to see the breakout or maybe test a major support level before I'd be interested in it. So keep that in mind. Enphase Energy. Enphase Energy, you can see gapping down, clearing these the March low from, I guess that's March 17th. Look at the relative strength on Enphase Energy going into its earnings. This is the relative weakness, really, of Enphase versus the renewable energy group. It was not looking good going into earnings, and now you can see why. I don't like to hold any stock into earnings if it is showing relative weakness, and this was a perfect example. You want to see one that did have excellent relative strength going into earnings? It was Chipotle. I happen to like Chipotle, but that's a different matter. But over the last 3 or 4 months, you can see that the relative strength was beginning to pick up heading into its earnings report. They had blowout numbers and it was one of the best stocks today. Just a couple of industry groups I'll give you as well. Couple of things that I've seen. We had a breakout on the internet group back at the beginning of, the top was in February. Recently, we broke out. We've pulled back. We have Meta platforms reporting after the bell. That could be the catalyst to take this group higher, or maybe it goes the other way. So we're going to absolutely be watching that. Next, I wanted to show you the Specialized Consumer Services Group. Double top right there back in December and February. We made the breakout. We've pulled back and now getting close to that support level and right on the 20-day. I thought that was interesting. And then also business training and employment agencies. What is going on with this group? Been very, very poor. You can see it's trading near a 52-week low. Watch that support area. Would not be good for this group if it fails there. All right, that is it for the market recap. When I get back, we will interview my good friend, Arthur Hill. Can't wait. I think you're going to enjoy this. We'll be right back. Welcome back, everyone. Again, I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. I am subbing, guest hosting this week for Dave Keller. He'll be back live on Friday. But until then, it's you and me. And of course, some great guests. We're going to get to Arthur Hill in just a couple minutes. But I do want to go through some announcements with you quickly. So let's take a look first at, I'd like to encourage you to send in your questions so they can be answered live on air. The email is the final bar at stockcharts.com. That's how you can get your questions answered. You can tweet us at final bar SCTV, or you can put a comment below if you're watching on our YouTube channel. I encourage you to like the show. Hopefully you're liking the show. And also subscribe as well while you're here. I'd also like to share the guests that I'll be interviewing the rest of the week. Of course, I have one more day tomorrow, Thursday, April 27th. I'll be joined by Aaron Swinland, Vice President of DecisionPoint.com. And then, as I mentioned earlier, on Friday, April 28th, Dave Keller will be back hosting the show live from the CMT Symposium in New York City. The live broadcast will be from 1 to 2 p.m. Eastern with a replay from 4 to 5 Eastern. So now let's get back to the show. Got a great guest, a really good friend of mine, Arthur Hill. He is the founder of Trend Pro Investor. I think I got that right.
Trend Investor Pro.
Oh, Trend Investor Pro. Sorry.
.com.
I want to make sure we get that right. TrendInvestorPro.com. Arthur, it has been a long time. It's been way too long. Love getting together, discussing the market. How are you doing?
Doing good, Tom. Thank you very much for having me on. It has been a long time, and it is great to see you and chat about the markets.
Yeah, we were talking a little bit before, we got into the show, and just talking about how difficult the year's been over the last year. There's been so much chop. We had obviously a big downtrend in 2022, but that kind of ended with a lot of back and forth action. And you pointed out that we've had some big runs and then we've had some big declines, big runs, big declines. I know you got a few charts that you'd like to share with everyone. So I'm going to let you take it away with this perf chart.
Okay. Well, yeah, Tom, you make some great points because it has been, even though, we had a big decline in 2022, there were some big counter trend rallies like that move into the August highs. And then we've had a move off of the October lows going into late April. But along the way up and along the way down, these swings have been quite big. And it's the big trend that is not taking hold. And I was doing some research into ETFs, and I found that this market is so mixed that if you've got an ETF that's holding, say, 30, 40, 50 stocks, there are splits within that ETF, and that is hampering performance. Because, you got whatever 20 or 30 doing good and then 20 doing bad. And that is just really hampering performance for even the leaders, and they can't get a trend. And another thing we're seeing is rotations in the market. We had the tech high beta trade leading from January into February, and the Qs were leading January, February, and into March. But as this first perf chart here shows, things have been flipped around in April. So on the left, you've got the S&P 500, and this is as of yesterday's close, but it's down, less than 1%. But the Qs are down 3.4%. Russell 2000 is down 3%. And there's the high beta ETF, SPHB, down 6%. And high beta, as you noted, you would expect high beta stocks to be down today, like XLK and XLY leading lower, but they held up. But it's still just one day. But I think, the tide, the swing has turned basically, and high beta has turned down. Now, on the right side of that chart, you can see low volatility first. And that's kind of the opposite of high beta. So high beta is your risk. And so when high beta is leading, that means you have risk on in the market. You're looking to add beta to have risk. But when you have low volatility, which is the black bar, it is leading now. And that shows risk aversion in the market. And that's what we're seeing in April. And that's a negative because investors, traders aren't willing to take that added risk. They're being more defensive. And then if we go further right, you can see healthcare. That's part of the low volatility group. It's leading in April. This is April performance. Staples are leading and utilities are leading. Now, utilities and healthcare got hit today. And that's one thing you got to also keep in mind is if we get a decline like we had before in 2022, a big sharp decline, most ETFs are going to be affected. It's the high beta, the low volatility ETFs that are going to hold up a little better and show relative strength, if you will, just go down less. So I've got one chart from healthcare that I want to show you, and that is Medtronic. And it's got a classic chart pattern. It doesn't get much more classic than that. You can see the two green stripes. Those are two lows in the same area, around 75. We got an intermittent high. So it's a classic double bottom. This is a basing formation, and we've got a big breakout. And then you can see in that first indicator window is the trend composite. And that's part of the Trend Investor Pro Indicator Edge plugin. And it's also an indicator I use in my quantified strategies that we have at Trend Investor Pro. And we're going to start one tomorrow, in fact, on the S&P 500, trading S&P 500 stocks. We're moving from ETFs to stocks. And so the trend composite there, it turned bullish. You can see those green bars. It's at +5. And then just below that, the bottom indicator is Stoke Close. And it covers a 6-month range, and it shows you where price is relative to the high low of that range. And so it's getting to the high of its 6-month range now. And I use that indicator actually as a stop loss indicator. And that's why the line is at 50 in the middle there. And so if that goes below 50, that kind of acts as a stop loss. Now there's one other indicator I want to show you. The blue line, the teal line on the price chart, it's at 78.42 now on the far right. That's the ATR trailing stop. And you can see it starts around 75. And so I set it 6 ATR values based on when the trend composite turned positive. And that puts it just below the lows of the double bottom. And so that's kind of like your initial stop loss. And so price rose for 3 days, and that's why the ATR trailing stop rose, hence a trailing stop. And so if price continues higher, that's going to trail up. And that can also be used as a stop loss. But it's very important. If you're going to put on a trade, make that plan before you make the trade and then trade according to that plan. Very important.
All right. First of all, I just want to let everybody know the ATR, that's the average true range. You can look that up in chart school, just in case anyone was questioning what that ATR was. And I'm assuming that when you look at this, I mean, do you take any signals, Arthur, when your trend composite starts to move up, even though it's still negative, or do you wait for that to go green? Does it have to go green?
No, I'm pretty much an either or kind of guy. I don't look at the degree of the trend change. I don't look for it to be at an improvement from -5 to -1 is no big deal to me. It's still a downtrend.
Okay. All right. Just wanted to clarify that. All right. Let's go over to your last chart then. Alliant Energy Corp, LNT. What do you see here?
So you can see the trend composite at the bottom is at 1. And the trend composite has 5 indicators. And so it's going to be always negative. So if 4 indicators are bullish and 1 is bearish, it'll be at +3. And right now you can see it's at 1. So that means 3 indicators are bullish and 2 are bearish. So the net is +1. And you can read more about that by looking at the Trend Investor Pro Indicator Edge plugin. But on LNT, it's a utility. And you can see as well that it's got a higher low with the dash green trend line. And then it formed support there around 50 in March 3 times, and then got a breakout in April. And so whereas you see money moving out of the Qs and high beta, you see money moving into utilities, which is Alliant Energy.
Yeah, and that actually is pretty interesting. I don't know if you're aware, Arthur, but back at the end of 2021, right before the top in the market, or as the market was topping, we had this same thing happening where we saw a lot of the defensive groups leading in that final surge to the upside. So, I've been pretty bullish this year, but I'm still paying attention that as we're struggling to get to new highs on the NASDAQ and the S&P, that we are seeing some of this rotation in the near term.
That's true. And, the S&P didn't take out its early February high. It's turned down just below that high, which I think is a negative. And then, as you said, small caps, you said they were down around 1% today. They are by far the weakest group. I think 35% of the S&P small cap 600 are above their 200-day moving average. The vast majority are below and in downtrends.
Right. And I think I can probably answer this question. I know what you're going to say. But, with small caps, we don't want to try to anticipate when they're going to start leading again. We want to see it first, right? Is that your approach?
Yeah, that would be my approach. And right now, if you look at the price relatives, or I'm sure if you went to your RRG chart, they would be in the lagging quadrant. If you look at the price relatives, I do the ratio chart of IWM and SPY, and it broke down in March and it continues to trend down. And that tells you that small caps are lagging.
Yeah, I was looking at the IWM, and I've been looking at the last week or two, and there've been some bottoming structures. If you go back the last 6 to 12 months, that when we get into these bottoming structures and they break out, they can run for a little while. But for right now, definitely weak. Well,
Yeah,
it's been a pleasure. Like I said, it's been way too long, Arthur. This was a great lesson in terms of making sure that you do plan your trade, as you said. I think that's one of the most important things. Know where you're going to get out when you get in. Don't get in and just, randomly and then just try to hope that it goes higher. Know, where you're violated, where your trade's violated. So great lesson for everybody. And it's always a pleasure to have you on the show.
Thanks for having me on, Tom.
Awesome. And there he goes. That is Arthur Hill, CMT, with trendinvestorpro.com. He founded it. You can check him out at his website. Always a pleasure to have Arthur on the show. All right. We are going to get ready to wrap up the show. And I do want to get into the 3 and 3. What I want to do today is similar to what I did yesterday. There are 3 companies that are going to be reporting. Well, there's a lot of companies going to be reporting after the bell, but 3 in particular that I wanted to take a look at for you and hopefully see what we got going on after hours. The first is Meta Platforms, and I'm just pulling this up in after hours. If you go at the StockCharts and this is set on symbol summary, then you can type in any symbol and you can get that after hours quote if you're not aware of that. So here was Meta, and you can see the stock up $18, almost 9% after hours. This one, like Microsoft, like CMG, and some of the others, was really setting up well going into earnings. I know today it kind of fell off that earlier high by quite a bit. But when you pull up the chart and take a look at it, I mean, we have been in such a nice uptrend on Meta for a while. And I like to look at the relative strength. So let me show you Meta going into this earnings report. While I showed you earlier that Alphabet, Google, had been downtrending versus the internet group, Meta is doing the opposite. It's been going up. Now we know why. I haven't seen the earnings report, the revenues, the earnings per share. But what I can say is based on this reaction, must have been a pretty good report coming out, and I'm not surprised. Second chart I wanted to show you is another company that's reporting after the bell. So let's pull this one up and see what the latest is here. Well, I'm not seeing any kind of a reaction yet. I don't know if the earnings are out, but what we can still do is take a look at the chart. This is another big company in the aggressive area of the market. So we're going to see what happens. Looking across the recent highs and the lows, this is a chart that's been going mostly sideways, although I could argue that this move back in January, as Arthur was pointing out, so many risk-on stocks were taking off back in January, and this was no exception. ServiceNow with a big move there, pulled back into this area where we had previous resistance, also where we'd had previous support, went right back down there and then came back up on a relative basis. Let me get over to that chart and show you that. On the relative chart, you can see it's mostly just sideways versus software. So I don't really have any strong opinion one way or the other on ServiceNow, but a breakout obviously would help the group. If we could get back up to that 480 to 520 area and challenge all these highs, we'll see what happens when they do start to trade after hours. Last one I have for you is KLA Corp. This is a big one in the semiconductor space. It's a semiconductor equipment manufacturer. And after hours, still not showing anything on this one just yet. But let's take a look at this chart before we wrap up the show. You can see it's been downtrending, been going sideways really since about mid-November. It's got some gap support coming in right about where we closed. So I think which way we go from here is going to be really important on KLA. All right, that is it for us today on the Final Bar. I do want to again thank Arthur for joining me today. It was such a pleasure to hear his perspective on what's been taking place in the market. You can go over to trendinvestorpro.com if you want to check out more from Arthur. But got to be careful out there right now. The market's definitely weakening. We got some issues maybe mounting again with banks. Volatility's picking up. Earnings coming in all over the place. We'll try to keep you up to date. Everybody have a great evening. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.